Have you ever looked at a stock chart and wondered why did the price just do that? Most people think the market is just a chaotic mess of news and random trades. But Richard Wyckoff, one of the greatest traders in history, discovered the truth. He realized that stock prices don't move by accident. They are propelled by forces. If you can identify these forces, you can actually predict where the price is going next. In the early 1900s, Wyckoff noticed a group of super traders. These weren't your average investors. These were massive players with so much money that their buying and selling actually created the market trends. They tried to be secret, but they had one problem. They couldn't hide their footprints. Every time they moved huge amounts of money, it showed up in the price bars in the volume. Wyckoff called this collective group of pros the Composite Operator. Think of the Composite Operator as a useful fiction. It's a way for us to imagine all the big banks and institutional players as one single giant mind. The Composite Operator is smart. They don't follow the news. In fact, they usually do the opposite of what the public does. While the average person is panicking and selling at the bottom, the Composite Operator is quietly, stealthily buying. They want to absorb all the available shares without anyone noticing, so the price stays low while they fill their pockets. To win, you have to stop thinking like a layman and start thinking like the Composite Operator. Their game has 4 distinct phases. Accumulation, where they quietly buy at the bottom. Markup, where they push the price up. Distribution, where they quietly sell to the public at the top. And markdown, where the price crashes because the big players are gone. Today, we're focusing on how a crash actually stops. This is the Composite Operator stepping in to save the day. There are 4 footprints to look for. First, preliminary support, which is the first sign of big buyers entering the market. Then comes the selling climax, a massive spike in volume where panic selling meets heavy buying. After that, you'll see the automatic rally, where the price bounces sharply as the selling pressure evaporates. Finally, there's the secondary test, where the price dips back down to see if there are any sellers left. If the volume is low on this test, it confirms the big players are in control. Wyckoff believed that anyone could learn to see these footprints. It's not about luck. It's about mastery through repetition. Go look at a chart. Can you see the stopping action? The preliminary support, the selling climax, the rally, and the test. If you want to stop being the public that loses money and start acting in concert with the smart money, hit that subscribe button. Let's master the charts together. Happy investing.